Good morning. So, what's in your wallet? We did have some excitement last week following the slow and boring Thanksgiving week. All indices closed higher, with the Dow, the S&P, and the Nasdaq all closing up about 2%. Among the notable stocks, Apple, GE, Alphabet, and the B of A all closed higher. It's really funny when you think about it, as all the releases and Fed speakers basically are leading everyone now to think that the Fed will indeed rise rates come September 16th. Even Janet Yellen said it, well, sort of said it. She didn't really say it, but she kind of sort of indicated that that would happen, especially after non-farm payrolls, which came in higher than expected at 211,000, higher than my estimate of 200, which was already higher than the market projection of 197. But tell me, do you really want to talk about the rate increase? Really? Okay, if you insist. Now everybody's jumping on the bandwagon expecting rates to go up, agreeing with abroad. Goldman Sachs chief economist Hatzius, who gets paid a lot more than I do, now says the rate hike will come and it will be gradual. Also the New York Times, including my old friend Gretchen Morgensen. But see, that's why you have to like the broad. I have the guts to talk about the interest rate hike way before anybody else does and basically have an opinion. I got out there and said they will raise rates and they will do it gradually. You know, I may not always be right, but I'm always sure. So is it guaranteed? Don't be silly. Nothing's guaranteed. But now the market is fully expecting a rate hike, so all news will be good, right? I mean, you know, you basically sell on the rumor and buy on the news, so everything will be good from now on. Same thing about oil, with oil crashing again last week because OPEC decided not to cut output. Why should they? I mean, especially when the leader of the gang is Saudi Arabia, and Saudi Arabia has really, really deep pockets. So, you know, at the gas pump, I'm always smiling. Not that I'm never not smiling, but I'm always smiling at the gas pump. The oil market is now a game of chicken, basically, to see who gives up first. And I had fun looking at Europe, and it's not anything that we didn't talk about before, but the ECB predictably lowered its already negative interest rate to more negative, from 0.2 to 0.3. But why bother, really? You know, please keep in mind that this is a symbolic gesture because it really, to me, means nothing. Now, this should sound weird to you, but let's just go through the numbers and the stuff here. The US is about to raise rates, right? So it would make the dollar more attractive. Europeans lowered rates, so it would make the euro less attractive. So the dollar should be higher, right? Wrong! That's why I don't trade dollars anymore. Because the euro rose against the dollar, closing the week at around 108.60, sorry. You know, I don't know, but take cover because it's not going to last. And while we are on Europe, it's so much fun to hear British Prime Minister David Cameron call to reimagine the EC as a multi-currency union, while the rest of Europe is looking for diapers, I'm telling you. You see, in 1992, the EU's Maastricht Treaty called for all participating countries to adopt the euro. We know that. Except that Denmark and England somehow got a free get-out-of-jail pass and acquired something like opt-out provisions, so they don't have to use the euro, really. In the meantime, there are a bunch of other countries waiting in the wings, not as anxiously as they used to, would you, to join the club. These countries include Bulgaria, the Czech Republic, Hungary, Latvia, Lithuania, Poland, Romania, and Sweden. And you know, between Cameron talking his game and all the problems in Greece, would you be waiting in line in a hurry to join the euro? So I don't know, stay tuned. And you probably heard that the IMF added the Chinese renminbi as an additional reserve currency for the SDRs. Keep in mind that the SDR is not a real currency, it's just a unit of account for the IMF. The Chinese are probably really happy because they've been screaming and yelling that there's just too many dollars and we're just too dependent on dollars and dollar this and dollar that. Imagine that, you know. And last week I read in the New York Times that the Chinese are flooding the US real estate market like there's no tomorrow because they consider it a safe place to invest their renminbi. No, wait, not their renminbi, their dollars, right? I mean, they gotta sell renminbi and buy dollars so they can buy US dollar denominated real estate. I just love that. You know, reserve currency or not, the dollar is still the favorite currency of Chinese investors. To add insult to injury, net capital outflows from China are estimated at record highs in November. Of course, these are all estimates, around $113 billion, maybe. You know, sometimes when I look at the news out of China, because none of these figures are credible, we don't really know if they're real. We just kind of hope they are. You know, when I think about China, I think about Argentina. I mean, capital outflows, devaluations, central bank intervention, people trying to get out of China, Chinese people trying to get out of China as fast as they can. I don't know. What do you think? You know, so what's in your wallet? But I'm not going to bore you this week with the economic releases of the week because there's nothing really interesting. And what the heck? We're all waiting for the Fed to raise rates or not. And that's next week. Oh, that's the 16th. Yeah, I guess that's next week. And today, you know, I'm going to give the quote of the whatever award, not the quote of the week, the award for excellence to Uruguay. Because while everybody was screaming and yelling in Paris about climate change, Uruguay, which is a nation very close to my heart and my home country, said that in the last 10 years, they have managed to bring up their energy dependency on fossil fuels to almost zero. And I think that they said that 95% of their energy is alternative energy. Good for them. They even have a head of climate change policy in Uruguay, a head of climate change. Now, what a novel idea. This is Abroad with a View. Thanks for tuning in.